Welcome to The Long Game. I'm Nathan Carter. And just so you know, this voice is AI-generated, but every word is written with care to bring you lasting clarity in a noisy world. Today's topic goes against the grain of everything we've been taught about success. It's not about hustle. It's not about action. It's about stillness. More specifically, we're talking about the power of doing nothing, and why in investing, the ability to not act might be the greatest skill of all. Now, I know how that sounds. We live in a world that celebrates motion, that rewards busyness, that tells us if you're not doing something, you're falling behind. But in the world of long-term investing, and especially in value investing, the opposite is often true. The best investors, they're not the ones constantly trading. They're not glued to screens all day. They're not chasing every new headline. They're the ones who know when to sit still. And more importantly, they know why they're sitting still. Let me take you back to one of the most famous quotes from Warren Buffett. He once said, "The stock market is a device for transferring money from the impatient to the patient." That's what this episode is about. The quiet strength of patience, the courage to be still in a world obsessed with movement, and how that one discipline, doing nothing, can lead to extraordinary results. Let's begin with a story. Imagine two people, both given $10,000 to invest. The first one, let's call her Sarah, checks the market every day. She reads every article. She buys one stock, then sells it a month later. She reacts to news, earnings reports, social media buzz. And the second one, we'll call him Daniel. He buys 3 companies he understands. He believes in them. He knows their value. And then he goes quiet. He doesn't touch the portfolio for years. He reads, he thinks, but he doesn't act unless something truly changes. 10 years later, who do you think did better? In most real-world cases, it's Daniel. Because while Sarah was paying trading fees, timing the market, reacting to noise, Daniel let compounding do its work. He didn't let emotion drive him. He let time carry him. That's the power of stillness. Now, let's bring this back to you. If you're an investor, or you're thinking about becoming one, ask yourself this: why do I feel the urge to act? Often, we act not because we need to, but because we're uncomfortable with uncertainty. The market dips, we feel fear. The market rises, we feel greed. A friend mentions a stock they just bought, we feel left out. And in that emotional churn, we forget something vital. A portfolio isn't a garden that needs constant weeding. It's an orchard that needs time. Doing nothing doesn't mean ignorance. It means wisdom. It means doing your homework up front and then letting the work speak. Let me tell you a story about Amazon. Back in 2001, Amazon's stock price had fallen by over 90% from its highs during the dot-com bubble. Most investors panicked. Some said Amazon would never recover. Others mocked Jeff Bezos. But some, a small group, held on. Why? Because they weren't watching the price. They were watching the business. They saw Amazon building warehouses, improving logistics, earning customer trust, expanding categories beyond books. They understood the core value. So they stayed still while others ran. And over the next 2 decades, their patience was rewarded many times over. Now, I want to be clear. Doing nothing doesn't mean doing no thinking. In fact, it's the opposite. Doing nothing on the surface often comes from deep thinking underneath. You study the company. You understand its risks. You evaluate its leadership. You consider the competitive moat. And once you've made a decision, you let go of the constant twitch to tinker. Because in investing, activity is not the same as progress. Let me say that again. Activity is not the same as progress. In fact, too much activity often erodes progress. Let's talk about trading costs. Every time you buy or sell a stock, there may be small fees, maybe a fraction of a percent. Doesn't seem like much. But over years, with every trade, those costs add up. And not just in money. They add up in mental fatigue, in emotional stress, in lost opportunities because money was moved too quickly from one idea to the next. Now, let's add another layer. Taxes. In many countries, if you hold a stock for more than a year, you pay a lower capital gains tax. But if you sell too quickly, you may face higher rates. Long-term investors, the still ones, pay less tax. Not just because of timing, but because they don't interrupt compounding. You see, compounding, that beautiful snowball effect, only works when left alone. You don't dig up a seed every week to check if it's growing. You plant, you water, you wait. That's investing. And waiting, real waiting, is an emotional skill because it means resisting the pull of the moment. It means tuning out the noise. It means saying, I've done the thinking, I've done the work, and now I wait. Now, let's go back to Warren Buffett. For most of his life, Buffett has made very few investments, but the ones he did make, he made big, and then he sat on them. He once said his favorite holding period is forever. He doesn't mean literally forever, but he means buy businesses you'd be proud to own, even if the market shut down for a decade. Now, let's bring in another example. Let's talk about Apple. At several points in its history, Apple faced big market doubts. After Steve Jobs passed away, during major product delays, when new competition emerged. And yet, for the long-term investor who believed in the brand, in the customer loyalty, in the ecosystem, staying still turned out to be the best decision. Because while others panicked, the patient investor simply asked, has the core story changed? That's a powerful filter. You don't sell just because the stock dropped. You ask, has the business itself changed? If not, maybe the best move is no move at all. Now, let's bring this into daily life. In the age of apps, alerts, news, and nonstop updates, the idea of sitting still feels unnatural. We think, I must be missing something. I need to react. But what if the strength is not in reacting, but in standing firm? What if clarity comes after stillness? Think of the ocean. When the water is choppy, you can't see below. But when it calms, everything becomes clear. Your thoughts are the same. And in investing, your best decisions often emerge after the noise fades. Now, let's be honest. There are times when action is needed. If a company's core has truly changed, if management starts making destructive decisions, if the competitive landscape collapses, then yes, it's time to act. But here's the key. You're not reacting, you're responding. There's a difference. Reaction is emotional. Response is thoughtful. Stillness gives you space to respond, not just react. Now let me close with this. Every great investor, every one of them, has learned the value of waiting, of doing less, of saying no to impulse, of trusting that good decisions take time to unfold. Doing nothing isn't laziness, it's discipline. It's standing on a foundation while others jump from trend to trend. It's choosing deep conviction over shallow confidence. It's understanding that time, not timing, is what builds true wealth. So, the next time you feel the urge to act, pause. Ask yourself, what's really changed? Is this noise or signal? And do I truly understand what